Okay, this is assessing non-financial performance. Um, Actually, in your book in F2, it is like kind of a more of a theoretical topic, but in reality, in real life, it is very important. It's extremely important, your non-financial performance. You know, performance measurement, it has been one subject. I mean, it is one of the roles of the management that they measure the performance. And which performance you measure? You measure performance of the organization as a whole. Then you measure performance of different departments. Then you may measure performance of different products. For example, you have different products A, B, and C, and you measure your performance. For example, you make the dairy products, you also make chocolates, you also probably are making some, some other confectionery products, and you want to see how each product is doing. Okay, then you may also measure performance of individuals. So when we say performance measurement, we are measuring the performance of individuals, of products, of departments, of organization. Now, what type of performance do we measure? Two types of performance we measure. One is quantitative and one is qualitative, or you can call it, one is financial, one is non-financial. Financial performance measurement, how do we do that? We do it with the help of, your variance analysis. Like you make a budget and you say, I should make a profit of $100,000, and then you made actually profit of only 90,000. So you said that, okay, performance was not very good because we made $10,000 less. And then in order to investigate that where did you lose this 10,000, you do your variance analysis. So variance analysis, actually it helps you in breaking down of those deviations from your budget. Like, material should have been for 10,000, but we spent 11,000 on material. Oh, we spent 1,000 more. So if we spent 1,000 more on material, my profit goes down with 1,000. And then within material, you say, okay, if it is 1,000 on material, then why it was, did I buy it expensive? Did I pay more money? Or did I waste some material? So then you have material price variance and material usage variance. So you are just going into details. Okay. So you started with that overall, my budget was not achieved by 10,000. Out of that 10,000, 1,000 is because of material. And from that 1,000, which is for material, 600 is for the price, 400 is for the wastage. So you are going deep into details. So this whole process is called financial performance measures. And one more thing which you do in financial performance measurement is the ratio analysis. Now, any one of you who has already passed your ACCA F3, they already know it. And those who have not done F3, they would learn it in some time. You do ratio analysis like what is my net profit ratio, gross profit ratio, inventory turnover ratio, receivable days ratio, payable days ratios, debt ratio, liquidity ratios, so many. So all these are numbers. Financial performance, either you do it through your variance analysis budgeting thing, or you do it from your ratio analysis. Ratio analysis, it is part of your financial accounting, and budgeting and variance is a part of your management account. So by taking or using the numbers from financial accounting, we do ratio analysis, and that is performance measurement. By taking the numbers from management accountants like budgeting and variances, we do performance analysis, and that is called financial performance. And this we have done so far. Now we start today's topic, which is called non-financial performance. And I said it in the very beginning that it is very important. Why do I say that it is very important? Please remember one thing. Very carefully listen to my words and always, always, always remember, because this is something which you will always speak. There are always some, how do I say, benchmarks. There are always some benchmarks in each topic. The main things which you need to know. You may not know the details, but the main things you know. For example, if you speak about Paris, what comes to your mind? Eiffel Tower comes to your mind. You may not know many other things, but at least if somebody says, about Paris, you say there is Eiffel Tower. So you must speak from there. You must start it from there. So similarly, when you talk about non-financial performance measurement, where should you start your discussion? Which is the first thing which you should know, or which is the first thing that you should mention? Always remember one thing. Financial performance. Now I'm going to make a comparison. Okay, financial performance, it only tells you about your past. It does not tell you about future. Financial performance is a reflection of your past performance. Non-financial performance speaks about future. This is the first thing you need to remember. Non-financial performance speaks about the future. What does that mean? I tell you. For example, last year you made $1 million. That's very nice. You are very happy. I made $1 million. This is my financial performance and I'm happy. But does that mean that next year you will also make $1 million? The answer is I don't know. Maybe yes, maybe no. I mean, last year profits do not guarantee your next year's profit. So your past does not actually guarantee the future. So financial performance only tells me that this year, which has already finished, or the last year, I made $1 million. That's very good performance, but that's about past. What about future? In future, what will happen that non-financial performance will tell you. For example, I tell you that last year you made $1 million. This is financial performance. And non-financial performance is what? Non-financial performance probably is customer satisfaction going down. So I say that, last year you made $1 million, but your customer satisfaction level is going down. Now, can you predict future? You say, yes, I can. Maybe next year I will not be able to make $1 million because customer satisfaction is going down. Customers are not happy. So you see, non-financial performance, it told you about future. A very simple example I started with. The second thing is that what financial performance is very restricted. Financial performance, what do? You say, okay, I have two material variances, two labor variances, two variable overhead variances, or I have net profit ratio, I have gross profit ratio, I have, I don't know, this your receivable days or payable days. So there are some very rigid given set of ratios which you find, and these are the ratios or these are the measures which you have to apply in every business. Now, there are different types of businesses. There is a school, there is a restaurant, there is a bank, there is an insurance company, there is a construction company, there is a retail store, and there is a hospital. And there probably is an airline. These all are different types of businesses. So am I going to use the same ratios and the same variances in all of these industries? The answer is yes. The question is it very appropriate or is it suitable? The answer is no, because you have the same rigid financial performance measures and you are trying to use the same ratios and the same analysis for a hospital and then for an airline. These are two different businesses. So this is one of the drawbacks of financial performance. Whereas in non-financial performance measures, you actually create measures which are suitable for your business needs, which are suitable for your business needs. For example, what could be the non-financial performance examples? Now I've given a lot of examples for financial performance like variances and ratios. Let's speak what could be the non-financial performance measures. What could be the examples? Number one, I told you like customer satisfaction. Number two is product reliability. Number three could be the rejection rate or the product failure rate. Then you might have, if you are in a restaurant, one non-financial performance measure could be the waiting time. The waiting time between the customer places the order and he gets the food on the table. That's a non-financial performance measure in a restaurant. The customer comes in, he places an order. In how much time do we deliver the order there? Then probably we can say that the time between paying the money and bringing back the check. Or probably if you speak about hospital, or maybe a hotel, you talk about cleanliness, you talk about hygiene. So these are all different non-financial. If you talk about a bank, so if a customer comes into the bank and they have to deposit money or take out money, how much time does it take to complete that process? How many tables do they have to go? How many windows do they have to go? If you talk about police department, performance measurement could be the crime rate. Performance measurement could be the criminals, arrested. If you talk about the judiciary, performance measurement could be the time in which the decisions are announced, how quickly the cases are solved, and decisions are given. If you talk about a hospital, the number of patients you treated, the number of patients who become healthy, the number of patients who died, and so much and so on. So for every different type of business, you have your own business, and within your own business, you define your performance measurement. But your performance measures different. So one benefit, one difference between financial and non-financial is number one, that financial performance speaks about past, non-financial performance speaks about future. The second difference is that financial performance measures are very rigid. There are very few, and you have to use the same in every business. And number two is that, and the non-financial, whereas on the other hand, they are flexible. You can design them, you can make them according to your own nature of business. I don't know what you do, but whatever you do, you can think about your own procedures, you can think about your own activities, your own processes, and then you know how to say design a performance measure. I give you an example. For example, I've been running this institute for almost 10 years now. We have got physical campus, and a lot of students they approach us. How do our students they approach us? Now, I'm giving you a real life example that would be very interesting for you to understand. So please listen with patience. So we have a company, we have an institute. They just walk into our office. They know the location. They come in. They say, okay, we have come here. We want to study ACCA F2, or we want to study ACCA F9, or whatever. So these people, they come in. They ask about. We tell them this is the timing. This is the schedule. This is the teacher. This is the price, and they take this information. And they say, okay, we will get back to you. Some students they don't come physically. They send us on email. They make an inquiry on email. Some people they write on our Facebook page, and some people they just make a phone call. So we are receiving inquiries from different students. Now, what happens that during 1 month, let's suppose that 100 students they made an inquiry, and we gave information, and then out of those 100 people, only 60 people they decided to join, and 40 people did not come back again. Now we think that why these 40 people did not come? They were really interested. I mean, they walked down to our office, they traveled there, they probably wrote an email. So they were really interested in that course, and we gave them information and they didn't come back. So it means that the information which we provided probably is not suitable. There was something which was missing in that information. Maybe they did not like the price. Maybe they did not like the, how to say the tutor, or maybe they did not like the schedule or whatever. So we lost 40 people in the first stage. Then what happens? That these 70 people, 60 people who decided to join, they come in, and after 2 lessons or 3 lessons, they, they left, or probably they continued, but they do not come to the second course. They did F3 with us, but they don't come for F5. So then we say, okay, everything was okay. Now the problem lies with the teacher, because the student comes in, he agreed, he paid money, he joined, but then he does not take another course with us. So where is the problem? The problem is with the tutor. The problem now is not with the price or not something. Maybe this teacher was not able to, justify the course. That he could not make people, satisfied with the performance. So this is a second level you measure the performance. So these are different levels which you can create for yourself. And actually, in reality, what we had before, we had 3 levels, because many people they took us information on phone, and when then we said, okay, you should come and visit us. They say, okay, we will visit you on Monday. So on telephone, he got the information, he got the price, he got everything, and he said, okay, I will come to your office and I will ask some more questions or maybe whatever. And then they came back, then they came to our office, and after coming to office, then they say, okay, we'll let you know in some time, and then they don't come back. So then we said, what is that problem? The problem is that on the telephone, he was convinced. But when he came to the office, he saw the environment. Maybe he did not like the campus, maybe he did not like the classrooms, or maybe he did not like the staff. And he said, he changed his mind. So you can make different levels of non-financial performance according to the nature of the business. You have a restaurant, you can decide your own. So anyways, two things I'm repeating again. Financial performance speaks about past, non-financial speaks about future. Financial performance, it has very rigid options like variances and ratios. Non-financial performance is very flexible. And then comes very important, very important. Financial performance is a traditional way of measuring the performance, and it has internal outlook. It has internal focus. Internal focus means that how much profit did we make? Did we make more profit? Did we make less profit? What are the variances? Or what was our budget? Were we able to achieve our budget? So financial performance is only speaking from our own perspective. How did we do? Did we do good or did we do bad? This is what financial performance is doing. It is organizational oriented. It is internal focus. And we are not speaking about customers. For example, we say, okay, we made a lot of profit. What about customers? Are they happy or not? We never thought about customer in your financial performance. I mean, you have done your variances, and you many times you said, oh, my variance is favorable, I'm very happy, or my variances are adverse, I'm sad. You always thought about yourself. You were very happy because you made more money. Did you ever think about how the customers are seeing you? How the customers, are they happy or not? So financial performance does not have an external focus. It only has internal focus. Whereas the non-financial performance, it has external focus a lot. Like what is the brand, how to say, the reputation of the company in the market, the brand loyalty, the product reliability, the customer satisfaction. And these are the factors which we are focusing on in non-financial. So non-financial performance, the third thing is that non-financial performance has external focus, whereas financial performance has internal focus. So this is a general, how to say, introduction about your non-financial performance. Now, if I see the topic list, it says that non-financial objectives and performance measures. So what could be the non-financial objectives? In financial performance, objective is one, making money. Financial performance is it only speaks about profitability. It has very straightforward objective. Non-financial performance, you have multiple objectives. Like I tell you, listen. Okay. By the way, why do we do performance measurement at all? Let me go back to point number 0. I'm not sure if I've given that example before or not. Hamza and others, whoever has listened my videos. Did I ever speak about a business like a human body? Did I ever give this example to you people? A business and a human body relationship? Please confirm. Yes or no? Fazil, are you there? Okay, so I got it. So I have not given you that example. Let me make things a little bit more, let's relate it in another way. See, I always say that a business is just like a human body. You know, when you heard that somebody died, Mr. X died or passed away, and then you ask what happened, and they say, oh, he got a heart attack. So his heart stopped working. So if his heart stopped working, why did he die? His other parts of the body were working. Only one part was not working, and he died. Just one part. Similarly, you come to me and you say, you know what, I cannot stand. I'm feeling very bad. I say, why? Because I've got a headache. I say, you've got headache. It's in the head. Why you cannot stand on your feet? You don't have pain in your feet. You just have something in your head. But then why you cannot walk? Why you cannot run? Why you cannot stand? Because one part of the body is actually affecting the other parts of the body areas. So it is not necessary that all of the body organs are malfunctioning or all of the body organs have failed. It is not necessary. One part of the body maybe it is having some problem and you say, I am sick. You say, I am not feeling good, I am sick. Similarly, a business has many different products and a business has many different departments. It is not necessary that all of the products are doing bad, all of the departments are doing bad, all of the processes are doing bad. It is not necessary. Maybe there is just one product, there is just one process, there is one just department which is doing bad. And that is actually making the entire business sick. That is making entire business unhealthy. So what do you do? If you have got a human body, what do? You go to a doctor and you give your blood test, you make some ultrasounds, you give some CT scans, different type of tests you give, you make x-rays to identify where is the problem. And you see the blood report and you identify that this is the problem, this is the area where there is a problem. And when you see, when you first you give the blood test, then you get the report, then you read the report, and do you stop there? You do not. After seeing the report, you identify the problem and then you find the medicine for that problem. If you do not do testing, you will not know that what is the problem and what or how should I solve it. Similarly, in the business, we know that there is some problem, but we want to identify where is the problem. And for that identification, we do that budgeting and variances and ratio analysis. We find out the problem and then we do not stop. We need to take some action to solve that problem so that the business becomes healthy. Okay, the same process, just like it happens in the human body or with you personally, the same thing happens with the business. You have a business, you make its report, blood report or x-ray or CT scan of the business through budgeting and variances. You identify the problems and then you take actions to solve those problems so that the business becomes healthy. Now, another thing you should understand. Uh, Within your body, there are some organs which you know and I know that they are very crucial and you must take care of them. For example, if you have some pain in your nail or if you have, some problem with your nails, you are not really worried because you know that it can give you some pain, but it cannot kill you. If you are some tooth, if you have a bad tooth, if it is aching, you know that it is bothering you. You cannot eat food very well, but it does not kill you. So you say, okay, no problem. I will go to the dentist next week when I will have time. No problem. I will live with that. This tooth is not going to kill me. So you are a little bit casual with that. The same happens, like we said, that within your body, not all organs and not all problems, they are equal. Some are crucial, some are casual. And you take care of the crucial things. If your heart is skipping the beats, if you have some missed heartbeats, you say, no, there is something wrong with my heart. I must go to the doctor immediately. Heart is something you cannot take casually. It's a crucial thing. You must go now to the doctor and must take care of that. Similarly, in the business, it again happens. We have some processes which are of less importance, and there are some processes which are of more importance. And we need to take care of those more important processes very carefully. For example, if you have a training center, an educational institute providing trainings for, let's suppose, ACCA courses. If your interior is not really very well, if your air conditioner is not working today properly, you can live with that, no problem. But if your teaching is not performing good, then your institute will be in trouble. You cannot compromise. You can compromise on, probably on interior. You may compromise on any other thing which is related to the decoration or interior or convenience of the students, I understand. But you cannot take risk or you cannot compromise with the quality of teaching. That is a crucial process. So in every business, there are some crucial processes and there are some casual processes. And we need to take care of those crucial processes. And for these crucial processes, what we prepare, we call them key performance indicators, KPIs. What we call KPI, key performance indicators. So what we do, we identify that which business our performance areas are very crucial. We cannot compromise on that performance area. And then we make some KPIs. What is KPI? I'm going to explain you now. For example, if you talk about McDonald's, why people go to McDonald's? McDonald's does not offer you the most delicious or the tastiest food. It does not. It's very simple, it's very ordinary, and it is the same for the last 1 century. It's not really very interesting. I mean, you don't have to discover or explore something at McDonald's. When you are going to McDonald's, you already know what you are going to eat and how is it going to taste. And it's not something super marvelous. So it's not really special when it comes to taste. It is also not really very much comfortable or pleasant or something, very fine atmosphere. No, it is not. It's a very simple environment, very neat and clean, that's all. Why do you go to McDonald's? So McDonald's does not offer you the perfect environment. It does not give you that aura, or it does not give you that fantastic interior or environment. No, it does not. The food is not really great. Why do people go there? For two reasons. Number one is the speed. Number two is the price. And then, of course, the cleanliness and hygiene. Most people who go to McDonald's, they go for speed because it is quick. I mean, you go inside, you give order, in few minutes you get your food, you eat it, and you go out. It's a quick bite. I tell you, when you go to some other continent restaurant, you go there, you sit down, after 5 minutes, the waiter comes in, then you place order, and after placing the order, you wait for 20 minutes. After 20 minutes, he brings the food, then you eat your food and you are waiting for him, okay, bring me the check. He brings the check, you give money, you wait, and then he brings back the change to you. So that process takes 1 hour. And you are actually waiting very patiently. 20 minutes, 25 minutes, you will wait for the food in any Chinese restaurant or any other continental restaurant. You can fairly wait 20 minutes. Will you wait 20 minutes in McDonald's? I bet you don't. You go to McDonald's, you are not in a mood of waiting 20 minutes, because when you went to McDonald's, psychologically what was most important was in your mind was that I want to go out quickly. I'm not in the mood of spending 1 hour in McDonald's. I cannot wait 25 minutes for the food. Where is my food? Bring me my food in 5 minutes. For them, the crucial process is speed. McDonald's. So they have to manage their speed. So they are not working on improving the taste of the burgers. They are not working on bringing some new types of burgers. These are the same burgers. What they are working on, how to make the process much more faster. This is their crucial point. And they have a KPI on that, key performance indicator. For example, the target is every customer should get the food within 6 minutes. 6 minutes of order. This is the performance indicator. Just like you set your budget that in my one table there should be $20 of material, there should be 1 hour of labor. You are setting your budgets and targets. Now you set targets here that every order should be served within 6 minutes. Customer comes in 6 minutes, the food is in his hand. And you measure your performance against that. So every week, every day, every month, we sit down and we see that are we meeting that objective or not? We call it key performance indicator. This is our performance indicator. And when I see that last month, we delivered food in 6 minutes. This month, we are delivering food in 9 minutes or 8 minutes. So 3 minutes we have spent more on each customer. That's a bad sign. Customers will not come to you because time is something which you cannot compromise. Speed is something which you cannot compromise. So key performance indicators, you set on those crucial areas. You say, okay, there is a performance indicator. For example, if I talk about, how to say, an educational institute, because that comes to my mind. If I talk about an educational institute, to me, the performance indicators, the crucial areas is a teacher. That's the process which I cannot compromise. I have to bring in the best teachers. And then my KPIs are how many lessons the teacher has missed. So during one semester, during one course, there should be 30 lessons or 24 lessons. How many lessons the teacher has missed? One measure. Second measure, how many tests were given? The quizzes and tests were given. And very importantly, in how many days the quizzes and tests were checked and returned. The test was given on 17th of September, and the result is announced on 27th of September. After 10 days, you are giving result, there is no use. Student has already forgotten what was the test, he has already forgotten what did he write, and he has no interest in the result after 10 days. Result, you give in 2 days, 3 days, one day, that's where it hits hard. Because you give test today, you exactly remember what was the test, what did you write, and tomorrow I give you the results, you are excited. But that excitement that just vanishes away with time period. So I need to make sure that teachers that give tests, and after giving the test, they must also check the test in shortest period of time. I put a KPI of 2 days. Within 2 days, you must return back the test. So you could have different performance measures on different crucial areas, and you set your KPIs, key performance indicators. So for McDonald's, I told you that it is about time, and for an institute, it could be anything else. So these are non-financial objectives. So these all objectives like 5 minutes, 2 days, 3 days, these are called non-financial objectives and performance measures. And these are different in different businesses. I gave you an example of a restaurant. I gave you an example of an educational institute. You can think from a perspective of a hospital. Okay, you've got a hospital and you need to manage the non-financial performance. And the non-financial performance measures you will sit down and create for yourself. And these would be different in different hospitals. These are totally on your own choice. Any questions until here?
No.